The Rajya Sabha is all set to take up amendments to the Juvenile Justice Act tomorrow. This after the Supreme Court refused the stay of the juvenile convict in the Delhi gang rape case. The victim JYOTI Singh's parents continue to protest at Jantar Mantar. The juvenile convict in the case was released from the correction centre yesterday and has been taken to a Delhi-based NGO.
Back to corporate news, Shireen. Indigo Airlines prides itself on the fact that it maintains one of the youngest fleet of aircraft in the Indian aviation sector. So when it did inform the stock exchanges today that Airbus has delayed the delivery of its latest A320neo aircraft, the stock took a big knock in trade today. That's how the stock performed in trade. Sonia Shenoy, who tracks the aviation sector very closely, now joins us with the details. So now, Indigo seems to have run into some rough weather and no clarification yet from Airbus on that delivery timeline.
Well, Indigo was under intense pressure today on the back of a delay in the delivery of the A320neo aircrafts from Airbus. Now, the delivery of these aircrafts was expected to happen by the 31st of December, but now there's been some industrial reasons because of which the delivery has not taken place. Also, the company said that there is no visibility of the future delivery schedules and there could be a potential for additional delays as well. Now, the company Indigo is looking at mitigating the potential shortfall in capacity through other options, although we don't know what those options are. Remember, in August of 2015, Indigo had finalized a $26 billion purchase of 250 new Airbuses, and this was expected to add to their growth in the years to come. Indigo was expected to grow at a 20% compounded growth rate over the next 3 years post the capacity expansion, and they were planning to expand their fleet to 134 aircrafts in the next 15 months. But now that Airbus has delayed the delivery, the growth will slow down because of that.
So the impact in Indigo was its stock falling by 5% in trade today. Thanks, Sonia, for joining us with that. Back to policy news. The government is facing heat from the opposition parties like Congress on the Nairobi trade deal of the WTO that is expected to lead to the culmination of the Doha trade talks. Ritu Parnabhuyan and Arif Sherwani report trade experts and civil society groups have criticized the Modi government for what is being termed as India's weakest show at the WTO.
Death knell for the Doha development round actually is there now, has been sounded.
The biggest casualty of this Nairobi ministerial has been the Doha development agenda.
Trade experts slamming the Nairobi ministerial declaration of the WTO, which was adopted on the 19th of December. The declaration will mean that India will have to cut down on sugar subsidies by December 2023. In return, India couldn't get a specific assurance at Nairobi on its demand on a special safeguard mechanism that enables poor nations to raise import duties for protection against spike in farm imports.
India and the G33 group of developing countries, they put it back on the table saying we need this now. But you see that in the text, finally what we have is that there will be a work program, there will be discussions, but we've been having discussions for years now.
Trade experts maintain that India could not get a reaffirmation on continuing the Doha trade talks. And without a Doha trade deal, programs like Make in India could be impacted.
And then we have the big ticket Make in India program, where it is impossible to do your manufacturing, to get your manufacturing sector up and going if you don't have a certain amount of tariff protection, or you can't use certain instruments to support the industry.
Experts also maintain that India will find it difficult to raise issues related to visa curbs without the Doha Global Trade Deal.
You know how difficult the H-1B visa has been, and all the time we face the threat from the congressman raising one or the other issue against our companies. Now it was possible to address some of these issues in the WTO negotiations. It will be very difficult for us to do it bilaterally.
On its part, the government has been saying that India's interests have been taken care of at the WTO. And Commerce Minister Nirmala Sitharaman will make a statement in the parliament. But the opposition is not impressed, and Congress will seek to corner the government on India's climb down at the WTO. In New Delhi with Ritu Parnabhuyan, Arif Sherwani.
Well, the Commerce Minister was expected to make a statement, but that didn't happen today on the setback, or the apparent setback, for India at the WTO. Now, the sunflower stock fell almost 5% today after the US FDA issued a warning letter to the company over its Halol facility. While the contents of the letter are not yet public, the street is fiercely divided over the possible outcome and its impact on the farmer major. Ekta Batra and Surbhi Upadhyay bring you that story.
It's the latest chapter in Indian Pharma's turbulent tryst with the US FDA. In the crosshairs this time is India's largest pharmaceutical company, Sun Pharma. The US drug regulator has issued a warning letter to Sun over its Halol facility. The contents of this letter are not yet public, but brokerages say if it does escalate into an import alert, then the company's FY18 EPS could be hit by as much as 15 to 16%.
Our initial reading of the warning letter indicates that it is based on the 483 observations issued in September 2014. I think in intervening period between the Halol inspection and today, I think almost all our major US manufacturing sites, both for dosage form as well as API, have been inspected by FDA. Post the inspection at Halol, almost all our major sites have been inspected by the FDA.
Form 483 includes observations on data validation, sterility and computer systems. A section of analysts believes that since the warning letter raises similar issues, the remediation timeline of 12 to 18 months should remain unaffected. JM Financial has retained its buy call on the stock, saying the risk is already discounted in the price. Citi shares that view, keeping its target price at 1,020 rupees a share.
There is no incremental observations cited in the warning letter, and the earlier observations were sort of procedural nature. That was not relating to anything data integrity or something like that, which normally we believe is critical. So since those issues are not there, so we are as of now not factoring any kind of import alert kind of a development for Sun in the near future.
But not everyone agrees. Morgan Stanley has downgraded the stock, slashing its price target by 22% to 762 rupees a share. A similar downgrade has come from HSBC. The brokerage has cut its target price to 735 rupees, saying the warning letter could delay the recovery in Sun's US business. IIFL also strikes a note of caution.
I don't think there is any positive trigger that we are seeing from here which could enable the stock to move positively. The positive trigger for Sun in the upcoming quarters is basically approval for Gleevec that they have already got, in which they are going to be on the market exclusively as the exclusive generic for 180 days from Feb onwards. But post that, the key trigger for the stock to hold up or to move up would still continue to be Halol dependent.
While views vary, analysts are waiting for the warning letter to be made public to gauge the severity of the observations made by the FDA. Until then, it's anxious times for the management and the shareholders of the world's fifth largest generics company. In Mumbai with Ekta Batra, Surabhi Upadhyay.
More stock-specific actions in exclusive. Eicher Motors is gearing up to get a bigger slice of the global market action, and that's without competing head-to-head with market leaders like Harley-Davidson, KTM or BMW. Speaking to CNBC TV 18's Joy Banerjee, Siddhartha Lal says he's of course the company's MD. He says he's commissioned a study to explore Brazil apart from developing markets like Indonesia and Thailand, but Lal did concede that it would be difficult to maintain the 50% growth rate in volumes in domestic markets that Royal Enfield has seen in the last 5 years.
We are starting 1st of January, we start our own market company sales. So we are appointing our own dealers. Right. We're probably opening up a store or two on our own. And that's how we're going forward in the US. It's going to take time. I mean, hopefully we'll have sales growth. We will have sales growth.
Are you studying more markets in this region? Yeah.
Like if the big guy in Southeast Asia is Indonesia, and Thailand's pretty large as well on the other hand. In Latin America, it's Brazil, right? So that's the big daddy out there. That's where. So have you started internally studying? Absolutely. I've been there. Our team has studied that market a lot. We've been spending a lot of time there. We have Royal Enfield employees. I mean, or let's say local Brazilian chap sitting there who works for us, and we've been working a lot.
You've grown at over 50% in the last 5 years. Clearly, how sustainable is that growth? And is that realistic to expect that sort of growth going forward?
We don't spend our time worrying about that issue. We spend our time figuring out how to continue to keep the market growing for us. So on the one hand, because we have such an excellent franchise now, Royal Enfield franchise, the distribution spread is happening really well. So honestly, we don't know, but we're not waiting to find out. We're going to keep moving the market forward as much as we can, and of course at some point we're going to stop growing at 50%.
Right.
But I don't know when that is.
Well, Royal Enfield, they're looking at a bigger piece of the global action, but they will continue to operate in the middle of the segment, so they're not going to be head-on against the Harleys or the KTMs.